You're at the threshold of one of the largest wealth transfers in modern history. While most people are distracted by stock market buzz and cryptocurrency trends, something remarkable is quietly unfolding in the silver market. Let's dive straight into why silver might be the most underappreciated asset of our time. Looking at the historical gold to silver ratio, we're seeing something remarkable. Throughout recorded history, this ratio averaged around 15 to 1. Today, it's hovering around 80 to 1. This isn't just a number, it's a signal, and it's screaming opportunity. But here's what makes this situation truly unique. Silver isn't just a precious metal, it's a crucial industrial component. From solar panels to electric vehicles, medical equipment to electronics, silver's industrial demand is surging. Yet, the price doesn't reflect this reality. Why? Because we're living in a financial matrix where real price discovery has been suppressed. Let's talk about the elephant in the room, the global debt crisis. We're witnessing unprecedented levels of government and corporate debt. Central banks have painted themselves into a corner. They've created a situation where raising interest rates to fight inflation threatens to collapse the entire debt-based financial system. Think about this: every time interest rates rise by just 1%, it adds hundreds of billions in interest payments to the global debt burden. The system wasn't designed to handle these pressures. It's like watching a pressure cooker with a faulty release valve. Something has to give. History teaches us that markets move in cycles. Right now, we're at the tail end of one of the longest bull markets in history, propped up by artificial stimulus and money printing. When we look at the Dow to gold ratio, we're seeing patterns similar to those before major market corrections. The mainstream financial media won't tell you this. They're too busy celebrating new market highs and dismissing warning signs. But ask yourself, why do they never discuss the fundamental problems with our monetary system? Why don't they question the sustainability of endless debt creation? This is where silver comes in. Unlike fiat currencies, which can be created at will, silver has been real money for thousands of years. It's one of the few assets that's both a commodity and a monetary metal. When the current financial system faces its moment of truth, silver could serve as a vital hedge against systemic risk. Consider this: annual silver mining production is around 800 million ounces. Industrial demand alone accounts for more than 500 million ounces. Add in investment demand, jewelry, and other uses, and we're looking at a supply deficit. Yet, the price remains suppressed through paper market manipulation. The question isn't whether the current system is sustainable, it's not. The question is, how do we position ourselves for what's coming? Financial independence means thinking differently, questioning conventional wisdom, and understanding real value. Throughout history, every fiat currency system has eventually returned to its intrinsic value zero. The average lifespan of a fiat currency is about 27 years. The current global fiat system is entering its twilight years, and the signs are becoming impossible to ignore. When we look at the data objectively, the pattern is clear. As debt levels rise, currencies lose purchasing power. This isn't conspiracy theory, it's economic reality. The system requires ever-increasing debt to function, creating a mathematical certainty of eventual collapse. Smart money is already moving into tangible assets, not just precious metals, but anything with intrinsic value. The wealthy aren't waiting for the mainstream media to sound the alarm, they're quietly positioning themselves for what's coming. The current stock market valuations are disconnected from economic reality. When the Dow potentially retreats to more sustainable levels, possibly around 10,000, the rush to safety will be unprecedented. Those who understand this in advance will be positioned to not just survive but thrive. Silver has historically outperformed during periods of economic uncertainty. During the 1970s crisis, silver rose from $1.40 to $50. During the 2008 financial crisis, it rose from $9 to $49. But these moves could pale in comparison to what's coming. The banking system today operates on the principle of fractional reserve banking, creating money out of thin air. This system requires continuous growth to survive. But what happens when growth stops? What happens when the debt can't be serviced? Central banks know this. That's why they're accumulating gold at the fastest pace in decades. They're preparing for a reshape of the monetary system. Silver, with its dual role as both a precious and industrial metal, could play a crucial role in this new paradigm. The green energy revolution alone could double silver's industrial demand. Every solar panel, every electric vehicle, every piece of modern technology requires silver. Yet investment in new silver mining projects has been declining for years. The math is simple: declining supply, increasing demand, and a price that doesn't reflect either. This disconnection can't last forever. When real price discovery returns to the silver market, the move could be explosive. The paper markets have allowed for price suppression through naked short selling and derivative contracts, but physical demand is starting to overwhelm these manipulation schemes. We're seeing unprecedented premiums for physical silver over spot prices. Taking control of your financial future means understanding these dynamics. It means looking beyond the mainstream narrative and recognizing the difference between price and value. Silver isn't just another investment, it's insurance against systemic risk. There are multiple ways to gain exposure to silver physical metal, mining shares, ETFs. Each has its pros and cons, but remember, in a crisis, physical possession becomes crucial. Paper claims are only as good as the counterparty backing them. The warning signs are everywhere: yield curves inverting, real estate markets topping, banking stress increasing. These aren't random events, they're symptoms of a system reaching its limits. Every major market crash in history has been preceded by similar signs. The difference today is the scale. We've never seen debt levels this high, bubbles this large, or systemic risks this severe. But this isn't about fear, it's about opportunity. Understanding these dynamics puts you ahead of the curve. While others panic during the coming reset, you'll understand what's happening and why. 1. Educate yourself about real money and sound economics. 2. Question mainstream financial narratives. 3. Consider allocation to tangible assets. 4. Understand the difference between price and value. 5. Position yourself for the coming paradigm shift. The coming years will likely see tremendous change in our financial system. Those who understand what's happening and position themselves accordingly won't just survive, they'll thrive. The opportunity in silver isn't just about profit, it's about protecting yourself from systemic risk while positioning for the future. Remember, throughout history, there have always been those who saw change coming and prepared accordingly. Right now, you have that same opportunity. The information is available, the signs are clear. The question is, what will you do with this knowledge?